they are financially dependent on you, while you're young and healthy, it's cheap. Okay? If you, God forbid, get sick or have some sort of disease, you're not going to be able to get life insurance. And I guess for people who have perhaps a history in their family of people developing cancer or something, and you want to protect and get it now while you're healthy, I mean, this is a horrible thought, but that would be really the only reason. And there's term life insurance and there's cash value life insurance, which is what you had talked about earlier. Okay, cash value is also called permanent. It's very expensive. Term insurance is very cheap. And the reason is that when you buy permanent, you're also building an investment account. Not only are you paying for that death benefit, but you're building an investment account. And the people who sell them, the insurance policies say it's the best investment you'll ever make. The problem is what they don't mention is how much you're paying in commissions and all the annual fees to have these policies. And when you're young and you're healthy and you have a really big life insurance need, you need a lot of insurance, you don't have a lot of money to pay for it, term makes sense. But term ends. So let's say you buy a 20-year level term policy, that means you've got that coverage for 20 years and then that's it. Okay? And it makes sense if you think about it. If you're, let's say you're 25, you have a couple young kids, you know, you want to make sure that you cover, are you laughing at the thought of being 25 with a couple young kids? 30, 35, whatever. You want to cover the time where you need the life insurance the most, when you've got young kids, when you haven't accumulated a lot of assets. As you get older and you accumulate more, you eventually don't need life insurance anymore if you've gotten to the point where you're financially independent, right? Where you have enough money that if something happens to you, the survivor would be okay. Something else I want you to be aware of is disability insurance. You're protecting your ability to earn an income. What that means is, God forbid something happens, you are disabled to the point where you can no longer do your job and earn an income. The disability insurance will pay you a portion of your income. You're not going to get 100% of your income in the event of a long-term disability. Why?
Because they still want you to work.
Because they still want you to work? What do you think the incentive is? Well, I can work and make 50 grand, or I can be disabled and make 50 grand. You're going to figure out how to be disabled, right? And if you know you're only going to make 60% of what you were making when you're disabled, there's less of an incentive to hurt yourself, okay? So when you get a job, that's another employee benefit, group long-term disability insurance, okay? And when you're young and you're relying on yourself to earn an income to pay your bills, if something happens to you where you can no longer earn an income to pay your bills, you're in trouble. And that's why disability insurance is so incredibly expensive. And you want to look at the employer's policy because sometimes they're not very good, and you might want to buy an individual policy to either supplement it or to replace it. Okay? You want to make sure that you're actually going to get paid in the event of a disability. And sometimes the definition of disability is so stringent, meaning this person has to be on their deathbed and can't, you know, lift up a finger or do anything at all. That's the only way the policy is going to pay. Obviously, I'm exaggerating, but you want to make sure that you're actually going to receive disability insurance coverage in the event of a disability. And liability insurance we talked about as well, meaning it covers you in the event of a lawsuit, right? And we talked about that umbrella policy that sits on top of the home and auto policy. Okay. So that really wraps up my insurance piece, and I just want to go through kind of what I want you to, the major takeaways from today. There are 50 of them. No, I'm just kidding. There are not that many. So that you can really kind of focus on, I mean, we talked about a lot here, and I think a lot of you are really comfortable and familiar with some of this, which is fantastic. It's going to serve you very well in your lives. And if this is new to a lot of you, I know it was a lot we went through, but hopefully with the book, and you've got some exercises to do after class, an exam to do after class, you'll be able to kind of process some of this and implement some of these suggestions in your own lives. The first thing that I want to make sure all of you do what you've done is defining your SMART goals, okay? And you're also going to do that as a post-class exercise. Specific, measurable, attainable, realistic, and time-bound. Very, very important. Write them down. If you do this now, there have been studies that prove that when goals are written down, there's a much greater chance of them being achieved. So write them down. Tell people about them. I am going to buy this watch in 15 years. I'm writing it down. I'm telling everyone I know. This whole class knows it's on the tape. You better get that watch in 15 years, girl. Okay? You know, whatever your goals are, write them down. It will make a tremendous difference. Tell people. Okay? Figure out how much does this translate into in terms of savings. And do it. Create a budget. Look at what's coming in, look at what's going out. First bill of the month is what? Pay yourself first. Start at 10%. If it's in the company 401k plan, fantastic, get that match. If not, do a Roth IRA. If you can do both, phenomenal, okay? If you guys do, make sure that you're doing this from the day that you start working. You will all be able to retire relatively young, younger than 60. You know, if you choose to. If you choose to. And you know, there are a lot of people who are working because they love it and not because they have to. And I plan to do that forever. Okay. Okay, the other thing that we had talked about was watching fees and expenses on checking accounts and investments and your credit cards, really paying attention to the expense ratio on the mutual funds that you buy, really paying expenses to the fees that you're being charged in checking accounts, so that you're making sure you're keeping your costs low. Make sure when you do have an investment portfolio, it's well diversified. You don't want to have all your eggs in one basket. Remember that illustration we looked at about compounding of money and how much faster and more money you're going to accumulate if you start earlier. So the earlier you start, the better, okay? Be aware, again, how much credit can cost you. It can be very convenient, okay? But you want to be sure that you understand the downside of using credit card to finance your purchases if you don't have the funds to pay off the credit card at the end of the month, okay? Importance of good credit. I can't stress that enough. It obviously is going to impact potential employers, the interest rate on various mortgages, auto loans that you get during your life. It's going to impact the cost that you pay for insurance coverages. So you want to make sure that you pay your bills on time, that you save regularly, that you're a good borrower, okay? And also you want to make sure that you have the appropriate insurance coverages. You want to make sure you have auto insurance when you have a car. Homeowners or renters insurance, liability, disability is very important. Disability insurance, people tend to focus on life insurance, but disability insurance is even more important because there's a greater chance you're going to be disabled than you're going to die early, okay? I know, that sounds awful, but it's true, statistically. So I know that we've put together some exercises for you to do after class, as well as an exam to do after class, and I'm hoping that those are helpful in solidifying some of the information that we talked about. So I hope that this was helpful, and best of luck to all of you. I wish you happy, healthy, and wealthy futures.